I really believe that passive income is essential, especially in an economy like today's, where millions of people are struggling to get a stable job. So I figured we should talk about some dividend stocks, which pay you every single quarter just for owning them. Today I'm going to share with you 4 of my favorite dividend stocks for 2020, as well as answer some really common dividend questions. So let's get into it. Hey everybody, my name is Hisham Khan and welcome to Income Over Outcome, where we talk all about investing and personal finance. Today we're going to be talking about dividend stocks. Now, a dividend is a sum of money that a company will pay its shareholders depending on the reserves it has. It's basically a way for a company to thank people for buying its stock. The dividend stock that I think offers the best returns for 2020 is at the very end of this video, so be sure to watch through the whole thing. Now, everyone talks about dividend stocks and how great they are, which is true. Dividend stocks are an amazing opportunity for some passive income, but the truth is that a lot of dividend stocks are simply not worth it. First, we really need to understand why a company would want to pay its shareholders in the first place. And it's because they want to encourage them to buy their stock. But the thing is that really strong companies don't need to encourage people to buy their stocks. You'll see that companies like Amazon and Google don't have dividends. And that's because people already know that these companies are great investments, so the companies don't have problems getting stockholders and they don't need to encourage people to buy their stocks. On the other hand, you'll see that companies that have really good dividends tend to not perform that well over time, so they need to offer an incentive to their shareholders. You'll see some companies like Exxon offer huge dividends. Right now their dividend is 8.3%, which is amazing considering the average dividend on the S&P is just 2.5. But if you look at Exxon's chart, they don't really perform that well over time. So they need to offer really good dividend to encourage people to buy their stock. A lot of the dividend stocks that people talk about have really good dividends, but they don't perform well over time. And personally, I don't want to buy a stock if it doesn't mean I can sell it for a decent profit, even if it has a really good dividend. That's why I think it's really important to find a balance between growth over time and a good dividend. But some people might disagree with me, saying that a really high dividend is worth a stock not growing over time. But this is simply my strategy, so all the stocks that I'm going to talk about today fit this criteria. But I want to know what dividend stocks you all like too, so feel free to drop them down below. A few of you have asked me if dividends can change and how long you have to own a stock before you can get their dividend. So I'm going to answer those questions right now. Dividends can change all the time, and it really depends on how well a company is performing. If a company is doing well, then they're probably going to keep their dividend and maybe even increase it. But if they're not doing as well as expected, then they might lower their dividend or take it away completely. And that's exactly what's happening with companies like Dick's Sporting Goods, GM, and Goodyear right now. All these companies have taken away their dividends for 2020 because of how the economy is. And that's why it's really important to look at a company's dividend history. How often do they pay their dividends and how often do they lower them? These are some really important questions to be asking when looking to invest in companies. All of the companies I'm going to talk about today have solid dividend histories. Now, how long you need to own a stock for before you can get a dividend really depends from company to company. Usually when companies announce their dividends, they say that they're going to pay a dividend on a certain date to all shareholders who own the stock by this specific date. For example, this year AT&T announced that they're going to pay a dividend on May 1st to all shareholders who own their stocks by the end of business on April 9th, which means if you wanted to get AT&T's dividend, you would have had to own it before April 9th. Now, this is going to vary from company to company, but it's essentially the same principle. Now, you might think that buying right before the dividend date is a genius idea because you own it for a little amount of time and you immediately get a dividend paid to you. But that's not necessarily true. If you're a long-term investor, like you should be, then it's probably better to wait till after the dividend date to buy the stock. That's because paying out a dividend actually dilutes a company's shares a little bit. You notice that after a company pays its dividend, its stock price tends to go down. Personally, that's when I like to buy in, so that I can get a bigger bang for my buck, and honestly, missing one dividend payment isn't a big deal to me. AT&T is actually the first company on my list. Their dividend right now is 7.28%, which is really good. Now, I think that companies like Verizon, AT&T, and T-Mobile, all these telecommunication companies are really good investments because they're necessities in today's life. Everybody needs cell phones and the internet, so they're not going anywhere anytime soon. I think that they all have really good long-term potential, but the reason that I like AT&T the best is because it has the highest dividend by far. Verizon's is only around 4%, and T-Mobile doesn't even have one. AT&T is also really appealing to me right now because they're down almost 25% because of the coronavirus. But I don't think they're going to have a problem bouncing back from this because, as I said, they're essential to society today and they have a really good balance sheet. They're also creating one of the strongest 5G networks right now that's supposed to be ready around the summertime, which shows that they're always innovating their technologies to stay competitive in the market. So that, combined with the fact that they have a really good dividend, makes this a no-brainer for me. My next dividend stock is IBM. Now, this is a classic dividend stock that has been in my portfolio for years. IBM stock has honestly been pretty inconsistent over the last few years, which is one reason they need to offer a dividend, but their dividend is at 5.63%, and I do see a lot of good potential with them. They have pretty decent financials even though their stock has taken a pretty decent hit from the coronavirus. But they're doing really great things with AI and blockchain, and they also recently announced this huge deal with the pharmaceutical company Merck. They're always innovating, which is why I'm not really worried about their stock price over time, and I know that whenever I see that dividend hit my account, I get a huge smile on my face. Speaking of Merck, that's another pretty solid dividend stock, but its dividend is a little bit lower at around 3%, so I'm not going to go into too much detail on it, and it's not counted in the 4 on my list, but you should definitely check it out because it's a pretty solid buy. Number 3 is 3M, whose ticker is obviously just 3M's. It's like M&M and M's. Okay, that was actually really stupid. Number 3 is 3M, and their ticker is obviously just 3M's. Now, 3M has a dividend of just over 4%. If you haven't heard of them over the last month, then you must be living under a rock because they make those coveted N95 Max that everyone wants. But you might not know that they make way more than medical supplies. In fact, you probably have a bunch of things in your house made by them right now. From scotch tape to the sponges you use to wash your dishes. And this diversity in their products is a huge reason I think they're really valuable. Their stock hasn't been doing extremely well over the last few months, but they're honestly doing way better than a lot of the companies out there, only dropping by 13% over the last 3 months. And they also recently signed a $126 million deal with the government to make more masks. So I think that this company is really important and we're only going to continue to need their products, which is why I think they're a solid dividend stock. This last stock is a stock that was recently bought by Warren Buffett and it has historically offered a really solid dividend, and that's PNC. Now, PNC stock has taken a huge hit from the coronavirus because of low interest rates and people are spending less on their credit cards, but they still have a ton of cash, which means they're pretty liquid to pay their dividends. And they've also performed way better than their competitors like JP Morgan. In fact, Buffett has been liquidating all of his financial services stocks like JP Morgan, but he still sees value in PNC. That's because they're really well positioned to come back stronger after the coronavirus. And with a dividend of 4.6%, I think they're a really good buy, and so does Warren Buffett. That's all I have for you today. I hope you enjoyed this video and learned a little bit about dividends and dividend stocks. If you did, be sure to hit that like button and subscribe for more. Feel free to leave any questions or comments you have down below and I'll be sure to answer them, and I'll see you in my next video. But until then, take care.